What's up, guys? If you're new to the channel, welcome. On this channel, we do everything crypto, technical analysis, passive income opportunities, NFTs, all that. So if that's something you're interested in, don't be shy to smash the subscribe button and hit the notification bell so you can know when I drop a video. So first things first, this is not investment advice. This is not financial advice. This is simply what I see on the charts, and this is my analysis. This is how I would approach the markets. Okay. So with that being said, let's break down these candlesticks. Okay, you see it's 708. I mean, it's a daily candle just closed. And if you see my previous video, you see I mentioned that this bearish daily close, that I was expecting some bearish momentum to further on the charts, right? And as you can see, that's what occurred. First of all, sorry if you hear cars in the background. I'm in my car doing this. You gotta get it how you live. You feel me? But the daily, if you would before the daily close, after this bearish engulfing candle tested this resistance area, the momentum of this bearish close further pushed price down to here, right? Thus price was in momentum, and we filled this wick to the left. We did that, right? But buyers came in, and price rejected this area, thus forming some sort of support at this level. Okay, now if we go to the 4 hour, right, you can see it looks as if we're forming some sort of support here. And if this 4 hour closes like this, that's a good sign for bulls, in my opinion, right? That's a good sign for bulls, right? Also, you remember I mentioned in the video yesterday that we could possibly find support around my EMA level or moving average level, and it did. It honestly did. Okay, it did. So that was good to see. That was good to see. So what can happen with the price action now, right? So now that we've made this solid retracement, about a 50% retracement, not to mention that is confluenced with this bullish engulfing close right here, right? These two bullish candles just outdid all of this bearish action that occurred in 1, 2, 3, 4 candles. 2 candles outdid 4 candles of work. That's great. That's a good sign of bullish activity. Okay. Now, with that being done, it looks like bulls want to re-enter the market, but I wouldn't be surprised if we get, simply because we have this wick right here, if we get a little bit more of price playing around in this area, and then we can start to see a push up. Okay. That's not far-fetched. That's not outlandish for us to see. Only way to figure it out is just wait for price to tell us where it wants to go, right? So let's zoom in some more and go on the 1 hour. So the way to track this or gauge this where price wants to go, we have to track price on the lower time frames, and as these candles close, and then that will build up to the bullish move on the higher time frame. Okay, so that's why we're gonna keep cycling through the lower time frames, right? So what's happening on the 1 hour? What I see on the 1 hour is just a zoomed in picture of what we saw on the 4 hour, which is bullish engulfing activity. Okay, so what for me, if I were to from seeing this type of action, for me to get into a bullish trade or enter in a bullish trade, I want to see some sort of support found. Okay, so we made this high. You go on and say we made a high, right? So I want to see some sort of support, some sort of support or candle price action, some sort of candle formation that's showing me that price is ready to continue up. Okay, or something like this, right? What this would basically indicate is price came up, made a new high, came back down, retraced, right? Or some people call it did a correction. Okay, and in that correction we made a new higher low, right? And then we made a not a higher high, but we still made a higher low, and then another higher low, right? And in an uptrend, the most important feature is consecutive higher lows, right? So let's go down to 30-minute. So on the 30-minute, what I'm seeing is just a more of a zoomed in picture of what we saw on the 1 hour, right? So it's looking nice. It's looking nice, right? But I would say be careful, right? I would say be cautious because, right? If you've been on my videos, if you've been keeping up with my videos, you know what this is. This is a counter trend line, but it also acts as a bearish pressure gauge. Okay, because yes, we have found support on the 4 hour right here, right? What we need to see is a higher low forming, right? Because right now these are the lows and this is a lower low, right? So a move that's not far-fetched is this can easily create a lower high and then continue downwards with this type of formation, right? So that's something to pay attention to, right? So what we need to look for, a good sign to show that price wants to go up, some sort of formation like this, right? Price finding some support and breaking above this counter trend line and this height to the left, right? And that height to the left. So you could enter off of this, some sort of bullish, let's say bullish engulfing candle, or a shooting star or a pin bar, whatever you want to call it. But for me, I like to minimize my risk, as much risk as possible. So I would have been looking for some sort of move like this. Basically support being found. First of all, that's the first criteria. Above the counter trend line, second criteria or simultaneous criteria, and I would love to have a close above this level right here. To be fair though, a support being found here, that's not a bad trade. Let's say support is found somewhere in here, or maybe off the support, and then doing something like that. A safer trade, so you don't like get faked out, would be this counter trend line breaking after support being found, and then something like this. Personally, this would be a formation like this would be a more safer scenario or risk friendlier scenario. Right? Because why? Putting your support way below here allows you to absorb some of the fluctuations of price. You know, because we know price don't move as pretty as this. I mean, sometimes it do, but I don't think of myself as a lucky person. So I try to cover myself for some of the worst scenarios. You feel me? That's why I like to go for the least risky scenario, the least risky trade setup, because that's just how it is, right? And to be fair, today was a very bearish day in the crypto market, right? They was actually very bearish day in the crypto market. Even though it kind of closed, it closed. The way it closed does not indicate how bearish today was in the crypto market, right? I got Ethereum. Ethereum had a bearish close. XRP bearish close. Chainlink bearish close. A lot of pairs had a bearish close. But FTM at the end of the day, FTM was bearish almost all day, right? As we can see from this wick right here. It's at the end, before the daily candle close, we experienced a rally and bulls entered back into the market, right? So what I could say is what I would say is a great confirmation for bulls is if we can get this next daily candle close bullishly or bullishy. Probably saying that wrong, but a bullish close, a nice solid bullish close, you know, probably something like this, you know. Probably get a little John Wick action happening in here. You feel me? Why is it doing like that? You catch my drift. I would like to see a bullish close, two bullish closes would like actually solidify that support was found here, and then that would prove that bullish momentum or bulls have re-entered the market, right? Similar to something like this, because you see here we had some bearish actions and then a bullish close, and you see the next day we also had a bearish action, right? But this bullish close like this, which was the low was higher than the previous daily low, and the bullish close was very strong with a very full candle close. Okay, now, so this candle I would like to see the low staying higher than yesterday's low and a solid close candle. That's the type of candles that can give you some solid information on the next direction that price would like to go. Okay, so yeah, so see, that's what I'm saying. That's what I'm saying now. Yeah, you had that with that bullish close, but price could easily play around off this counter trend line and continue further down. Don't sleep. Don't sleep. Do not sleep. This could literally just be price putting in a new lower high, right? And if that occurs, that means that would be a good sign for bears, right? I don't know if you guys have been following my analysis so far, and if you're new, I want you to notice that I never give a. I'm not one of those people that say, "Oh, price is going this way, price is going that way." No, I don't try to predict where price is going. I let the market tell me where price is going, right? I like to plan for both scenarios, right? I I like to envision, or from me looking at charts so much, I already kind of know what I want to see. That's the type of action that tells me the direction the price is going. Okay, so I try to apply that and that just comes from studying charts and just putting in the hours of just putting in the constant hours of studying charts and price action. So with that being said, if price were to form a lower high here or fail to break and close above this counter trend line, a 4-hour engulfing candle closing below this level, closing below or engulfing this bullish candle here to the left, would be a beautiful sign for bears. Personally, that would be a beautiful sign for bears, and that would be a great shorting opportunity to possibly come down here to this support. You feel me? Because that would give us a lower high. Because it's right. This is a lower low. This is a lower low. You feel me? This is a lower low. So a lower high being formed here would be a great sign to at least take price down into here, right? For me, a lot of times when if I'm in a trade, I use the negative 27% and 61.8% to mark off my take profit levels. Okay, negative 27% is my first take profit level. Negative 68% is my second take profit level, right? And those of you guys who know who use Fibonacci, you know that. Well, I would think you know that a rejection from the 38.2% level is a very strong indication of a continuation of the trend. Okay, that's a healthy trend. So all you can do is just wait. You can notice I say a lot of times in my videos, if you're a returning viewer, a lot of things they say is just wait, wait. Let price tell you what to do. Don't force it. Do not force it. When you force it, that's when you start to make mistakes. When you know what I'm saying, you start to make mistakes, and when it's actually time for price to move in the direction that you had previously forecasted it to go, you then lose so much money. You then kind of discourage to re-enter the trade. You then blow your wad so much that like, trust me, I've been there, so I know I've experienced all of that. So that's my analysis, guys. Stay tuned. See you guys tomorrow. Let's see how the price action. Let's see what occurs. So that's my analysis, guys. Thanks for watching. See you guys tomorrow.